Good afternoon and welcome. I am Maria Rosa Vaquerizo. I'm the CEO of the Andean American Associations. These were the first chambers of commerce in the US for Colombia, Ecuador, Peru, and Venezuela. They were founded in the 1920s and 30s, and these associations together have hosted more than 1,000 programs over the 93 years. Today, we are honored to meet with the president of the World Bank and to take part in an engaging conversation with David Malpass. This event is in partnership with our colleagues from the Brazilian American, the North American Chilean, US Mexico, and US Paraguay Chambers of Commerce. We have close to 300 registrants in today's program. This shows the enthusiasm that this conversation with David Malpass has generated in the Latin American community. I would like to welcome our board leadership, Stephanie Younger-Mote and Ana Blanco for Colombia, Juana Caicedo Selinger for Ecuador, Michael Skoll for Venezuela, Manuelita Cori for Chile, John Welch from Brazil, and members of our board. We also want to welcome our distinguished representatives of the governments of Colombia, Ecuador, Peru, Chile, Argentina, Nicaragua, and the US, as well as the Organization of American States, CAF, Banco de Desarrollo de America Latina, and the Wilson Center. We also like to welcome a sustaining Andean member, Sherman and Sterling, and a special thanks to the press for covering this important program. We have today Associated Press, Bloomberg, Financial Times, the Foreign Press Association, and MSN. We also have with us rating agencies, Fitch, Moody's, and S&P Global. We have major banks, including our sponsors, BBVA and Banco Pichincha. Also in attendance, we have Bank of America, Credit Suisse, Deutsche Bank, Goldman Sachs, HSBC, Itaú, JP Morgan, MAUFG, Santander, Sumitomo, and UBS. And obviously, I want to welcome every one of you, all our attendees. During our conversation, you will have a chance to write your own questions. Please look at the chat tab that you have at the bottom of the screen. And there you can be writing your questions throughout the interview and the conversation. You can just write your own questions and we will handle them at the end. Now we'd like to introduce the president of the Ecuadorian American Association, who has been instrumental in confirming this important program. She's Juana Caicedo Selinger, Senior Vice President at UBS Financial Services in New York. She will introduce our panelists. Juana, the floor is yours.
Thank you, Maria Rosa. Good afternoon. Welcome to our program with the President of the World Bank, an institution that is key to the growth of the Andean region and Latin America. As you know, COVID is still raging in our region and has had a severe economic impact that is affecting the life of millions of people. Thank you very much, Mr. Malpass, for taking your valuable time to be with us today, and Mr. Serworkum for accepting to moderate the interview. We have a great turnout for these programs and look forward to your remarks, dialogue, and questions and answer sessions. I'm very pleased to introduce both of you. David Malpass was selected as the 13th president of the World Bank Group by the bank's Board of Executive Directors in April of 2019 for a 5-year term. Mr. Malpass previously served as Undersecretary of the Treasury for International Affairs for the United States. As Undersecretary, he represented the United States in international settings, including the G7 and the G20. In 2018, Mr. Malpass successfully advocated for capital increase for the IBRD and IFC as part of a larger reform agenda featuring sustainable lending practices, more efficient use of capital, and a focus on improving living standards in poor countries. He was also instrumental in advancing the Debt Transparency Initiative adopted by the World Bank and the IMF to increase public disclosure of debt and thereby reduce the frequency and severity of debt crisis. Early in his career, he served as Deputy Assistant Secretary of the Treasury for Developing Nations and Deputy Assistant Secretary of State for Latin America Economics Affairs. Alejandro Senworko is Managing Director and Chief Investment Officer, Emerging Markets America for Global Wealth Management UBS, based in New York. In this capacity, Alejo leads a team of analysts focused on emerging market macroeconomics and the development of investment ideas in these markets. He's a member of the CIO Americans and the Wealth Management Latin American Management Committees of UBS. Is also a member of the advisory board of the Wilson Center Latin American Program and the leading global think tank based in Washington, D.C. Frequently appears in Bloomberg TV, CNBC, and CNN, and regularly contributes to financial publications, including the Financial Times, Bloomberg, Reuters, and the Wall Street Journal. Alejo also is an adjunct professor at Columbia School of International and Public Affairs, where he teaches a course on emerging markets. Now I'm handing the floor over to David. Please, David.
Thank you very much, Juana, and thank you, Maria. Thanks to the Andean American Association and everybody on the call. I want to especially thank Juana Caicedo, President of the Ecuadorian American Association, for inviting me and organizing the event. And I want to say I've worked closely with your various associations, also ACLA, the Association of American Chambers of Commerce, and also the Council of the Americas for decades. And I've known you all to be truly committed to living and working in the region and to expanding commerce and investment and jobs. So it's good to see everyone, good to see friends participating today, and I think very good to see the effort of all of you to build prosperity in the region. I want to look back for a second. I first started working on development and the unique challenges facing Latin America in my 1984 trips to Honduras and Guatemala for the US government. At that time, the region faced underinvestment, superpower tensions, the aftershocks of Mexico's peso and debt crisis, and a range of unmet health and education deficits. The damage was severe, and it became a lost decade in terms of development. I was privileged to work on several projects in the 1980s that contributed to an eventual recovery, including there was major trade liberalization, the securitization of bank debt through the Brady bonds, the capital increases for the World Bank and Inter-American Development Bank in 1988 and 1989. And then in 1990, there was the Antigua Summit and the Enterprise for the Americas Initiative. With the end of the Cold War, there were new leaders in the region, increased trade, and stronger financial flows. These helped the region finally start a recovery. Turning the clock forward to today, I note the similarities in the nature of the problems and also similarities in the fervor of our hope for a recovery process. Beyond COVID, the region faces problems similar to the 1980s: weak investment and productivity, superpower conflict, inflation, and rising poverty, to name a few. The debt burden is similarly heavy and hard to restructure, though it's a different type of debt requiring a different debt treatment than in the 1980s. This time, rather than syndicated loans from external banks, the sovereign debt includes Eurobonds, internal bank debt, and large debt and debt-like instruments to Chinese institutions. Each of these debts often demands high interest rates and might not be treated under Paris Club reprofiling processes. Private markets are distorted due to barriers to market entry and exit and to competition, and people face physical insecurity, which contributes to migration flows. All of these severe problems risk another lost decade. I know this is what everyone on this call and throughout the region wants to avoid. The mission of the World Bank is exactly that, to work to reverse this downturn, to alleviate poverty and help people achieve shared prosperity, meaning a broadly higher standard of living. In addition to growth rates and per capita GDP, the World Bank, we recognize the importance of non-economic measures of prosperity, including such as access to electricity, clean water, health and education and nutrition, measures, environmental protection, biodiversity and resilience to climate change, and connectivity to people, information, and financial services. The foundation of these is built on governance systems that foster strong institutions and the rule of law, that protect human rights and small businesses, and that reduce corruption and crime. Thank you, Juana, for mentioning my work on transparency now. That also is a critical part of governance and part of the recovery for Latin America. So, recognizing all these problems, we should also recognize that people in Latin America and the Caribbean deserve all of the gains that are available, but the daily reality falls far short of that. Indeed, the poverty rates are going up, not down, even though the people are as talented as anywhere in the world. They embody innovation, hard work, and natural resources in abundance. I should note at this point that I recognize dramatic differences in people and governments across the region. I'm only lumping everyone together in the most general way based on their geographic proximity to each other. Having said that, in GDP terms, the LAC region contracted by 6.5% in 2020, according to our latest data. This is the sharpest regional economic contraction since we've had reliable data starting in 1901. Bolivia, Argentina, and Peru suffered the deepest contractions of 9%, 10%, and 11% respectively. Debt to GDP levels have increased by about 10 percentage points in 2020. That's to 72% from 62% in 2019. The social impact has been devastating. About 24 million people lost their jobs. The informality of labor markets made the human setbacks even worse, with poor access to safety nets. The private sector was strongly affected across the spectrum, from large companies to micro enterprises. We estimate that 28 million people have fallen back into poverty. While inequality is a worldwide problem, it's particularly apparent and problematic in the LAC region. Even before the pandemic, the per capita growth rate for the region was below 1% over the past decade. That's a reflection of poor productivity growth and faltering reform efforts. I've commented elsewhere on the many external causes of inequality. I'll list them. The concentration of fiscal and monetary stimulus in the advanced economies, the channeling of that stimulus to existing assets and financial instruments, causing concentrated gains for a small group at the expense of broader growth. And regarding sovereign debt, the powerful bias in favor of creditors. The pandemic worsened these inequalities because informal workers and the vulnerable were hit the hardest. The limited access to vaccines is adding materially to this problem, leaving hundreds of millions of people behind. And the differing effectiveness of the various vaccines compounds this problem. In combination, the inequality has further amplified the underlying social tensions, which we're seeing in Chile, in Ecuador, Peru, and more recently in Colombia. General elections in the region are reflecting deep divisions, polarization, and the resurgence of populism. I want to now turn to a more positive note. For Latin America, recent years have been a time of substantial structural transformation. The COVID-19 crisis brought a surge of high productivity sectors, including information and communications technology, finance, and logistics. As shown in a recent World Bank report called Renewing with Growth, some countries in Latin America and the Caribbean have strong capabilities in this area of technology. In a region that's home to 36 unicorns, about half a dozen countries in the region may be positioned to reap benefits from recovery. As countries allocate and mobilize the electromagnetic spectrum, it can unlock huge value. Even in Argentina, a country going through a very severe crisis, GDP shrank by $62 billion in 2020, but the value of the three biggest ICT companies, which aren't counted in GDP, increased by $66 billion, so more than the shrinkage in GDP. The pandemic has shown the huge value of social safety nets that allow digital payments. This can support families and the most vulnerable at much lower cost than previous systems. At the World Bank, we're working to help countries build digital infrastructure and social registries. These investments have spin-offs. They allow for a vital response during crises, and they also benefit financial inclusion and help lower the cost of digital transactions. All these techniques can rapidly equalize the differences among people and even among nations. For Latin America, the disruption may be enough to push the traditional banking sector into greater efficiency. For many countries, that would help overcome an obstacle that has lasted a century. The external environment has also become much more helpful to Latin America and the Caribbean, at least for now. Trade in goods has returned to pre-pandemic levels. Demand from China is surging. Commodity prices now exceed, in some cases substantially, their levels of early 2020. As a result, the agriculture and mining sectors of Latin America are thriving again. Meanwhile, the US is expected to run a very sizable trade deficit. Its stimulus policies amount to 4% of global GDP, much of it in additional demand. So the LAC region will be able to fill some of the gap in supply. Among advanced economies, there is growing interest to diversify global value chains and promote nearshoring. Latin America and the Caribbean are well placed to take advantage of these global trends. Overall, while there's a broad pre-pandemic development agenda for the region that's still valid, including improving access and quality of education and health, widening and deepening the financial sector, improving infrastructure, services, bolstering institutions. All of that is there. It's critical to continue strengthening the private sector as the leading driver of growth and supporting post-pandemic reforms that remove impediments to growth and help markets develop faster and with more innovation. Leapfrogs in technology can materially shorten the timeline for development. For long-term growth, there's a big agenda on private sector regulatory reforms to boost competition and productivity. I'll name three. First, LAC needs a supportive business environment that's conducive for entrepreneurship. Second, in many countries, it's important to address distortions induced by state ownership. SOEs still have a significant footprint in LAC, in Latin America and the Caribbean, with revenues around 13% of regional GDP in 2018. The presence of SOEs can displace private investment, create market distortions, and lead to significant fiscal costs. Market competition policies are also needed to reduce price fixing agreements created by cartels. And third, foreign investment can play a big role in improving competition and productivity. FDI inflows to LAC have grown over time, but they still constitute a relatively small share of global FDI, some 10.6% in 2019 for LAC. The most significant problems often relate to legal and regulatory frameworks for FDI, and especially frequent changes in regulations, which are not always transparent. I've been pleased to see Ecuador take steps on dispute settlement in recent days. Combined with dollarization, these steps will welcome investment, and they can have a big impact on both foreign investment and, importantly, on the rate of investment by Ecuadorians. I'd like to briefly mention World Bank activities in the region, then say a word about trade, and then take your questions. Our activities are substantial in the Latin America and Caribbean region. Since April of 2020, the start of the pandemic, we've committed nearly $10 billion to LAC. We have health-related programs in 24 countries, and we'll continue expanding that along with vaccination programs. We work with countries to improve the investment climate and provide support for meaningful investment projects. Helping Mexico improve its national digital ID system is a high priority, one of many. In Colombia and Ecuador, we're working to bring grant resources through the Global Concessional Financing Facility. It helps provide basic services, basic services for the Venezuelan migrants and refugees that are needing support, and to the communities that are hosting them. We're working closely with the Inter-American Development Bank and also with the IMF across the region. Productivity is very important, as is bridging the digital divide to facilitate the private sector. I'd like to mention two key parts of the World Bank Group that are working across the region to help the private sector and the business environment, namely IFC, the International Finance Corporation, and MIGA, the Multilateral Investment Guarantee Agency. I'll conclude my remarks on trade, which is where I started my US government career in 1984. The LAC region has a great opportunity post-pandemic to expand trade through more dynamic global value chains. LAC's economies are still less open than advanced economies or emerging Asia. For LAC, trade is 47% of GDP. For emerging Asia, it's 105% of GDP, more than double. Of most concern is that exports have grown only modestly, and most LAC economies continue to concentrate on commodity exports that face volatile markets and often have limited domestic multipliers. LAC's exposure to dynamic global value chains in advanced manufacturing in services is significant only in Mexico, with some exposure in Argentina, Brazil, and Costa Rica. So, deeper trade agreements can help tap global demand and nearshoring opportunities. No other region, barring Western Europe, has signed as many trade agreements as Latin America and the Caribbean. It will be important for a strong recovery for Latin America, for LAC, to take more aggressive advantage of those trade agreements that are within reach. So in sum, another lost decade is avoidable, especially given the region's energy capabilities, tourism, and biodiversity. Some of the biggest gains in prosperity have come in the aftermath of crisis. That's throughout history, some of the biggest gains in prosperity have come in the aftermath of crisis. So I'll leave you with three thoughts. First, the region's future growth and prosperity will very much depend on the decisions leaders make in coming months, political leaders and also business leaders like yourselves. Second, development assistance, including that of the World Bank, can provide material support, but not nearly enough to reverse the downtrend. And third, to achieve long-term sustainable growth and jobs, it will require a vibrant private sector. I've given today some of the techniques that can be used to bolster the private sector. And with that, I'm very happy to be with you today, and I'd be pleased to take questions. Back to you, Maria or Juana. Or Alejo.
Very good. Thank you so much, Mr. Malpass, for such an interesting and comprehensive introductory remarks. It's my pleasure to be here today. Thank you so much, the Andean American Association. And it's an incredible opportunity to be able to exchange some thoughts with you, Mr. Malpass. Let me start with, in a way, the elephant in the room these days, which is the most urgent topic in the region and necessary condition for Latin America to go back to thinking about growth and prosperity, which is vaccinations. As we all know, the region is trailing behind most other countries in the world in terms of vaccinations. There have been some improvements in recent weeks, yet there's a lot more work to be done. The concrete question to you, Mr. Malpass, is how are you working in terms of the World Bank Association with many of these countries to accelerate the vaccination drive and be able to, in a way, start thinking about the day after?
Thank you. Yeah, this is a critical problem and a critical part of the recovery, and it's deeply troubling the continued problems facing people, especially in rural areas, but throughout Latin America and the Caribbean. So let me wind the clock back. What we have done as the World Bank started in April of 2020 with the health programs that I described, and we were able to achieve programs in over 100 developing countries worldwide. And then in October, we expanded that to vaccination programs. They hadn't been invented yet, but we wanted to provide the financing in advance that would be used for deployment of the vaccines. In November and December, we did assessments of the capabilities of countries around the world to apply the vaccines, to actually administer the vaccines. That's a complicated process because of the cold chain, the need for healthcare workers, and so on. And then as vaccines began to be improved, to be approved from a regulatory standpoint, and then that involved stringent regulatory authorities in the US, in Europe, and also eventually the WHO with approvals. That then opened the door to actual vaccination. So what we've done is create a fast track process for programs to go through the board of the World Bank. We now have some 32 countries with active vaccination financing available to them. There's only 3, unfortunately, in Latin America, I think Ecuador, El Salvador, and Honduras, but we're working with other countries, and I'm hopeful in the next few weeks that there will be more Latin countries with financing in place. So then that gets to the most important point, the availability of doses. I've called over the months for the countries that have excess vaccine doses and production capabilities to release those doses to developing countries. That's been the biggest obstacle and the block step. So we now are beginning to have those doses be released by the US, by the UK, maybe by Japan. Well, yes, by Japan, and by some of the other countries that have built some stockpiles. And so the critical path now is to match those vaccines, the individual types of vaccines, with the countries that want those vaccines. And that's a logistics challenge. We see that in all of the activities. I'm very pleased that we were able to announce yesterday a program in Africa. You know, they achieved something that I'm hoping will happen in other parts of the world, where a manufacturer was able to give delivery contracts, actual delivery dates, through a African Union association. And so then the World Bank can immediately finance that. And we were able to announce yesterday what looks like 400 million doses that can flow in the next few months from production to the actual delivery process in the countries. The World Bank financing can be used for doses from any of the various sources, including and especially COVAX. If it is able to get doses, we can finance those doses. And then there's also the funding that's available for the deployment, which is substantial. In some cases, it's half of the total cost is the actual delivery of the dose, not just the purchase of the dose. So these are all active engagements of the World Bank. The G7 I was in London for the G7, or I'm sorry, I was in London 2 weeks ago for the finance ministers meeting, and then at the leaders meeting, I was there virtually, and they asked the World Bank to lead an effort to connect, to match the supply with the demand by various countries. And so that's an effort that we're now working very actively on this week with the IMF, the WHO, and the WTO to set up better systems to connect supply with demand.
Thank you, David, very much for the work you're doing in this very important area. I would encourage participants to continue to type in questions in the chat. I'm going to try to go through them in turn. And now, if we could pivot the conversation towards looking through the pandemic noise and thinking about a post-pandemic environment in a way. David, you talked about the increase in poverty in the region. The UN estimates that Latin America will face poverty levels not seen in a decade, extreme poverty levels not seen in 2 decades. How is the World Bank engaging with the hotspots in Latin America to overcome this endemic problem?
Yeah, it's a huge problem, and the consequences go on for years and years. So if children don't have nutrition in their diets now, that can last a lifetime, and so it's vital that we stop that. The bank we have a program for the poorest countries called IDA, which is in the process of being replenished by the donor countries. It has sizable resources that go in Latin America, for example, to Honduras and Haiti, some of the poorest countries that are facing higher poverty levels. In the other countries, we also work, and I mentioned in my remarks, the importance of social safety nets. So to meet the dive into poverty, we have been able to supplement some of those social safety net programs. For example, in Brazil, we have put in over $1 billion in the social safety net that they have that reaches into rural areas and has been expanded to cover more people. And we would like to do that in more countries. I mentioned also on the border of Venezuela and Colombia, we are able to use very highly concessional resources. These are often either grants, outright grants, or loans that are 40-year loans at zero, at no interest rate. Those can really help countries meet, and in the case of on the Colombia border, the communities that are facing the influx of migrants. And so I want to commend countries in Latin America that have been able to absorb some of the immigration that's occurred. I think that's really vital for the region, vital for the people in question to be absorbed into societies, recognizing that that people have to cooperate together, and especially when faced with catastrophe.
Excellent. Thank you so much. Next up, one of the Achilles heels of Latin America from a macroeconomic perspective, David, the fact that governments have been spending well beyond their means pre-pandemic, something that has been exacerbated by the pandemic. Debt levels, as you highlighted in your intro remarks, have gone up by, on average, 10 percentage points in the last year and a half. How can Latin American countries go back to a path of fiscal sustainability? We know it might not make sense for this to happen immediately, but this will need to happen eventually, particularly for emerging markets that do not enjoy the benefit of a global reserve currency.
Uh, these are big challenges. I wrote some notes to myself. One is transparency. You know, governments need to publish their budgets and in a form that people can understand where the money is being spent. As we look at the spending side of the fiscal accounts, there needs to be some kind of efficiency or effectiveness in the spending. And I'm not sure that, I mean, I'm sure that's not always the case. That means big projects that don't make sense. Some of the countries do that. And that means a kind of a constant overspending by various parts of the government budget, maybe well-intentioned to keep people on the payroll during the pandemic, for example. That might be necessary as a form of a social safety net. But there are lots of challenges on the spending side. And then I want to say on the tax side, history has shown, in my view, that low rates on a broad base are the way to collect the most revenue and also to allow the most growth within an economy. And so finding systems that mobilize domestic revenues in a way that doesn't block private sector development is a key balancing that needs to be done in countries. And I think improvements could be made in that area. So I want to close on your earlier question about how do you address poverty. And we know that to do that, you have to have jobs and innovation. You have to have some way that the people can start a small business and be able to compete within an economy. And in all those areas, the government can help that or allow that to happen through regulatory policy, trade policy, all of the things that I mentioned in my opening. And so I think we really have to put it all together, meaning the poverty reduction requires a stronger private sector, and the year after year, the efforts of the government to create an environment that's more attractive for, and you know, I don't think governments have to really look at foreign investors. They can look at their own investors, domestic population, and say, what would it take to allow or to cause small businesses in my country to double the number of employees they have? Well, that's usually you know, an achievable goal if they identify it that way. How do you get each business in each of the Latin countries and in the Caribbean to double the number of employees? Well, you create a trend toward an attractive environment, and there will be funding to do that. And then, of course, foreign investors will come in later and take less profits, but they will come in and add to the benefit. The best gains often are from the local population as they invest in their own countries. I think that can be a goal.
Thank you, David. You mentioned a few minutes ago something quite interesting. Looking at history, some of the periods of strongest innovation followed you know, difficult crisis. And in a way, Latin America may be facing an opportunity here to build back better with a new focus on new drivers of growth, right? So it is a buzzword that we all use, build back better. What does this mean in the eyes of the World Bank? What exactly are the areas of focus that Latin American countries should emphasize moving forward?
We all want that to be the case, that this is an opportunity. I don't so much use that concept because I think we have to recognize it's going to be really hard work for governments during a crisis to create a better system. That should be what everyone is striving to do. But I'm hesitant to call it an opportunity. This has been a terrible calamity for the people of the world, especially the poor around the world. And so I think of it more as an imperative that that the only way forward is through better business environment, better climate treatment of the climate, of environment, of biodiversity, of the resources of tourism, all of that needs to be really focused and energized. That's why in my opening remarks, I expressed concern about the trend toward conflict within the region. I think it's really important that the politics not be polarized, that the business community not be polarized, that people recognize that everybody lives in the same spot, and we want it to move forward.
Excellent. And one question is coming in from the public. Exactly in this area, what should the private sector do? What is the key responsibility of the private sector? What would you recommend?
There are lots of ways to answer that. I would say, that it's not the right answer to say make a profit. That can't be the immediate goal, because if you do that way, you're short-sighted. So the real answer is the private sector has to engage with the environment that they're in, with the government, with the community that they live in, and look to the long term, recognizing that that's the way to both to be responsible citizens, but importantly, to maximize the gains for the businesses in terms of jobs, in terms of net worth over the longer run. So I guess I would say take a long-term attitude and invest in connecting with the community and with the regulatory environment that they're in a transparent way that will have long-term payoff.
Very good, thank you. There's another area of interest based on your initial remarks, which has to do with technological leapfrogging and the room for improved digitalization rates. As you know, over a third of households in the region do not have proper access to internet. The internet services used to be a nice to have tool for families and individuals. It now became a necessity in a COVID world and a post-COVID world. How is the World Bank interacting with leaders in the region to increase penetration of internet services and encourage this technological leapfrogging that you made reference to earlier?
Yes, we should recognize it's a big undertaking. The infrastructure needed to successfully move up the scale in terms of however you want to measure it, in terms of the number of transactions in financial systems or the amount of information that can be exchanged, the speed of the internet. These take money, and as we see in countries around the world, it takes private sector money. The size of the infrastructure investments, I think, have to come from relatively large private sector companies. And so creating an environment that can do that is within the grasp of Latin America, but it has to be done kind of systematically. So World Bank works that way. The IFC, the International Finance Corporation, is heavily engaged in each aspect of the building of the infrastructure, from the undersea cables to the on landing to the cell towers and the mobile towers, and the regulatory environment that allows shared use and of cell towers and on down. And this concept of leapfrogging, I think, is really important as we look at what's going on in satellite technology. There's huge numbers of satellites going up every day now that will be able to shorten the distance, or maybe that's not the right phrase, that will be able to reduce the infrastructure investment that's needed by people in rural areas. And I think that will be vital for Latin America to tap into. So all of that, country by country, there needs to be a concerted effort to say, what's needed in order to give me 24/7 electricity that can create 24/7 high-speed internet and digital transactions that allow the financial sector to operate. One thing I did mention was the synergy between social safety nets. If you can invest in order to protect the poor and vulnerable within your society, that pays off. If you can do a transaction, a low-cost transaction that gets to the poor within your country, that is going to help pay for the infrastructure that's needed for financial services transactions, for example. I think one of the goals we should think of, one of the metrics is to have the highest number of transactions possible at the lowest cost. If you think of it, a goal for a region should be tens of billions of transactions at a small fraction of a cent per transaction. If we can achieve that, then you know that there's going to be information exchange going on within that economy, and there'll be innovation.
Terrific, thank you. Now, in honor of the event organizers, I'd like to ask you a few country-specific questions, maybe starting with Colombia per se. How is the World Bank engaging with Colombian authorities to address the country's main developmental challenges? And if you can help us understand from your perspective, what are the World Bank's priorities vis-a-vis Colombia in particular?
Colombia is changing rapidly, so I'm not going to claim to be up to date on how best to go forward. I saw the challenges they faced on tax policy. I think that, you know, a critical step for countries is to come up with a tax system that's embraced that people understand why it's the way it is, and you know how to improve it. So that's a starting point, and that's the same on the spending side for countries. I did mention, and I think it's very important, how Colombia has reacted and been supportive of the migrant flow from Venezuela, the very unfortunate flow, and they didn't invite that flow, and the World Bank's tried to be supportive of that. And then I want to mention a third area. Colombia has large cities, and the World Bank has worked actively in the cities to try to help create an environment that allows people to get to work. You know, mobility becomes a very important problem for people in Latin America because of the urbanization. So we've invested a lot, had a lot of projects within Colombia that help in that area, both working through the port system, through the urban area mass transit systems that I think have been helpful. But bottom line, you know, I mentioned earlier the inequality challenges that the whole world faces and Latin America faces, and these are I think very real challenging problems for individual countries in the region. I'm afraid I'm going to give you the same answer on several countries. One of the, you know, the countries are not static; they change almost month by month. And so go ahead, try another one.
I'll give you the option, David. Why don't you share with us any perspective you have on Peru, Ecuador, Venezuela, Mexico, Brazil, Paraguay, the co-organizer of the event. I'll let you decide where to focus your remarks. I know going country by country can be very challenging. So anything that you can share with us on those countries, and then we go to other questions from the public.
It's a challenging, each country is very different. So each one that you named, I would have different answers on them. I mentioned, and so, you know, I've worked over the decades really on the importance of different currency systems. So one general comment I would make for all of the countries is the importance of having money be stable even during the crisis, and many of them have. I've been pleased the way Mexico has been able to engage with its fiscal policy and with its currency policies, despite the hard hit from the pandemic. Mexico's well positioned because of the U.S.-Mexico trade agreement U.S.-Mexico-Canada trade USMCA that is is very important for the supply chain. So clearly tapping into the supply chains, providing supply, and then using that fiscal anchor that they have and the relative stability of the peso despite the inflation rates, I think is an important test for that part of Latin America, the northern part of Latin America and the Caribbean. And so that moves into Ecuador. I mentioned that's dollarized, and I think El Salvador being dollarized is a big plus. I was disappointed by the digression into the Bitcoin issue that they undertook. You know, and it's there's forced use of currency is never, I don't think, a good idea. So that's a challenge as we look across the region. Finding a way to interact with the rising inflation rate that is coming from to an extent from the U.S. and from the very high levels of demand that are being generated by the U.S. Stimulus, I think is going to be one of the macro challenges. And then on the, well, I mean, Venezuela is its own unique case. Unfortunately, they've gone from one of the from I think the highest per capita income in Latin America, or one of the richest countries, to one of the very poor countries, and that should be a giant disappointment to the region and to Venezuela itself as it moved in that direction. So I hope that we could see a turnaround. With the World Bank doesn't have an office there. We're not operating, and we hope for the best for the future as they find their way forward. Well, and then I mean clearly for the other countries, a lot of the challenge is going to be how do you put together this inequality and the polarization problem in a better way? How do you use democracy and freedom of speech, freedom of voting and elections in order to move forward in a way that respects the rule of law? And there's no short answer to that. So I think I better leave it there. Each of the countries is facing its own internal political challenges where the world should be praying for good outcomes for the people of the country that again respect the rule of law and can reduce the corruption, the crime, and the uncertainty that is such a challenge.
That was a challenging question, David. I appreciate your efforts. Let me try to make the best of our last 5 minutes together. There are a number of questions from the audience. David would like to know whether the World Bank is working to improve the protection of FDI in Latin America. You talked about in your intro remarks that, of course, the region suffers from weak investment. Of course, the external private sector can help, yet in many cases there are concerns about how protected these investments are. Is the World Bank doing anything to enhance this situation?
Yeah, I'll quickly mention some of the things. One is transparency. So when a government has a contract, we're really encouraging that to be public. That helps a lot with the confidence of foreign investors, and that gets at the challenge that's coming from these very high interest rate loans for projects that often don't work out in terms of the quality of the project. So you need to have debt associated with good quality projects in order to have a dependable environment for foreign direct investment. I want to mention the importance I placed in my opening on the rule of law. I mean, there has to be a legal basis. Over the decades, I've advocated countries having a short constitution and then layer that with regulations that can be changed by a due process. A challenge that Latin America faces is there's a tendency toward having the constitution be really long, and that makes it difficult for foreign investors or for any investors to really know what they're getting. One final thing I'll mention is there is a part of the World Bank called ICSID, the International Center for the settlement of disputes, settlement of international disputes, I guess, ICSID, which Ecuador has indicated that it would like to rejoin and would ratify, and that the specific purpose of that body within the World Bank is to encourage foreign direct investment by having an arbitration process. And so that's important in inviting new investment into countries. I'm not so much pushing any particular technique that I've described here, but more the issue that I mentioned in my remarks that that countries, governments should really have as a purpose to try to get their own people to invest, and then that will welcome foreign investors as well. And I think there's not enough of that, frankly, going on. Oftentimes, a government will want to work through a state-owned enterprise rather than through a small business, but they'd get more results in the long run from a bunch of small businesses than from maybe one monopoly power state-owned enterprise.
I'm glad you mentioned exit. There was one question from Martin that you just addressed by bringing that up. Since we are at the top of the hour, David, I'd like to maybe give you the opportunity to close with a deep dive into a topic that we haven't talked about yet, which is sustainable development, reforestation in the region. We've got a few questions from the public in this regard. How is the World Bank working with authorities and the private sector in Latin America to increase emphasis in this area?
Yes, thanks. It's a huge avenue of activity by the World Bank. We both have the Climate Change Action Plan, which we just released yesterday. I had announced the elements of it a month or so ago, and it's important the way it's set up. What we want to do is recognize that climate issues have to be connected to development issues for countries in order to actually get them done. So that's a core plank of our Climate Change Action Plan. And then another key element of it is that as countries spend money, or as the world spends money on an objective, there should be the idea not just of spending money, but of actually getting the results that you're setting out to do. So we're working directly with the countries on their indices, the nationally determined contributions that go to the Paris Agreement. So these are all challenging issues for countries because they cost money. They may create jobs if they can be done right, and they're important to the world. And so that's an avenue of investment by the World Bank. I want to mention also biodiversity, which Latin America has in abundance, which then itself can create jobs. It can create tourism jobs, but also all sorts of related jobs that build directly on biodiversity. And then I'll mention just the more general issue of the environment as a whole. That gets to the issues of clean water, of marine plastics, and of air pollution and auto pollution. All of those are issues that improve the standard of living. I mentioned in my opening remarks that as we think about shared prosperity, the World Bank has two missions. One is poverty alleviation, and one is shared prosperity, meaning raising living standards. And that's broadly construed. A person's living standard is improved if the air that they breathe is cleaner. And so World Bank's engaged across those various efforts, and we can call it sustainable development. I mean, that term also means growth for the long term. It means lots of investment because that creates jobs. It also means sustainability in terms of debt levels that are constructive for the countries themselves. So we're working on, I mean, that question of how do you achieve sustainable development and what is it? That's, of course, the core underlying purpose of the World Bank, and something that we work on every day, all the time.
David, thank you very much. I think we've covered a lot of ground. I want to be respectful of your time, everybody's time. It's been an honor, a great opportunity for me. I'll pass it over to Juana for closing remarks.
Okay, David and Alejo, thank you very much for your enlightening discussion. And David, for your explanation about the challenges facing Latin America. Our associations, our partner chambers, have been honored to have you with us and offer our support to the goals of the World Bank. We have certainly enjoyed this exchange of ideas. Thank you also to our attendees for your participation. And David, we hope to have you back soon in our forum.
Thanks very much, Juana. Maria, thank you.
And this time to Maria Rosa for final remarks.
Thank you so much, David, for taking your time to open this crucial dialogue with the Latin American community. We really enjoyed this engaging conversation with you. I wish it had continued for many more hours. It was so interesting to listen all the things that the World Bank is doing in the crucial elements that we all need for development in Latin America. Alejo, thank you so much for your expert moderation. And I want to also take a little time to thank the hardworking staff of the World Bank and the Andean American Association for making this event possible. We're a non-for-profit association, so if you would like to become a member, please contact our team via information on the invitations. Thank you so much to all for participating. We look forward to see you again. Thank you so much.
Thank you.
Thank you, everyone.
Thanks. Bye, all. Thank you.
Bye.
Bye, David.
Bye.